Good morning, traders. This is Shegun Chat 247. I train traders how to trade in harmony with the market. So this morning we are looking at the pound Japanese yen. Okay, my analysis is going to start from the low that was made on the 3rd of May 2024 after this breakdown. Okay, and we can see we have a strong reaction to the breakdown. We had this first move followed by the pullback, then another move that broke the high, but there was no follow through with the four wave. So in terms of wave structure, to count this, we can do this because that's the low. That will be 0. This is 1, 2, that is 3, this is 4. 4, we're expecting 4 to make a higher high. 5 for a confirmation of a trend continuation, but this did not make a higher high. 5. So let's change this just to make it bigger. I'm going to lock this in place. So now what we have here, I'm going to put it in a layman's word. The idea is this: in an uptrend, which is a series of higher highs and higher lows, the last wave, which is 4, confirms if the trend we should be expecting a continuation, or if there's a trend changing pattern. And what we saw here indicated to us that there has been a trend changing pattern, because a simple explanation of that is a higher low that failed to make a higher high in an uptrend. Instead of making a higher high, price made a lower high, and the price proceeded to break the starting point, the structure that failed to make a higher high. So this is now what we call the trend changing pattern, the formation that happened here. And I'm going to label this as so that's your trend changing break there. Put it at the bottom so we know where we are regards to that. So that's the first thing we want to look at. So, and as you can see, we had a strong breakdown, then they push the price back. So the 5 here becomes a key structural point, okay, because that is now a lower high that made a lower low. So this high, okay, becomes a key structural point. So we know in order for the trend to continue lower, they will come and trade this point again, and this is where we are right now. So we can now, so let's make this low, let's label this low a momentum low, because that is where the exuberance of the first sellers that comes in here, that is where their exuberance ended. Okay, so I'm going to uh, label this momentum low. The simple rule that attached itself to a momentum low is it must be sold. Okay, so that is that for the 1 hour chart. We go to the 15 minutes chart, we can see a better picture. So this is the price in question, that is the 5 that failed to make a higher high, and the 5 that made the lower low, sorry. So we've come above it. What we are looking for is a M pattern. Okay, so we've seen the first trade above it yesterday after the FOMC news, then it was rejected sharply. This here is another one here. This is actually the best one that happened yesterday morning. Okay, we can see the price came above it strongly. We saw the capitulation after breaking the low. 1, 2, 3, 4, boom. You see that? Okay, the key here is this: this high. We do not want price to close above this high. So with this is a violation point. Let me see if I have that there. Okay, that will be the violation point. Okay, we do not want the price to come above here in order for this trade to be valid. What we currently have here is, you can use the channel. Let me try that. Trying to see the downside is excuse me, the downside is what we're looking for, a break. We will not take any break out of the high, so I'm going to place this here. So the middle line is significant a little bit, but it's not the best basically, but we get the picture. I'm actually going to delete this and use an ordinary line. There are many ways you can capture a trade like this. So we have this line, we can call this a gift line. It's very prolonged, and also you can see there's like a price is coiling. Price is coiling. A break below here. Let me look at this. We want to use what I would like to do is I'll use a two level break. Okay, this will be, if we break here, that will be the first break, this will be the second break. So we can start to get involved below here. So I'll call this a break one. Okay, can add some position there, but here is my second break. As the This will be the second level of selling, okay, that I will get involved in. Anything below here, your risk may be too much, but right now the stop loss will come above here, which is the violation point here. So the price there is 295. Another thing you have to consider is, let's go back to the 1 hour chart now that I've labeled this. If this price come above here, it's no longer a downtrend, is it? Because we've seen the first break that gave us a pullback. What we are looking for is a failure. Okay, we are looking for something similar to this. Okay, a break of the high, then the second pass failing to break the high again, a break of the high, the second pass failing to break the high again, and that is the play. Okay, I'm not what I'm explaining here is actually one of the most important thing as a price behavior trader you can learn, the failure setup. Okay, because our expectation is, if this thing should work out, we will see a break of this low. Where's the of this momentum low? Because you have to think about it this way: sellers came in, they pushed the price down, it became too low, they discounted the price. But because this is the first wave of seller, there will be a contest to their metal. Basically, they will be tested to see whether they are still there, and this is the point that they came in. Okay, and now we want to see if we have the support of the sellers that actually have the conviction or the confidence to push this price down. So based on this analysis, we have a trend directional bias. We want to be selling as long as the price remains below the 200 and 294 point. Now, our trade location, which is the first break here and the second break here, those are the areas we want to. Once the price starts to come below it, I'll probably say on the 15 minutes chart will be a good time frame to get involved with this one. Once we start to see a close below here, we can start to enter a short position, placing our stop loss. Depending on your spread, you don't need to give it too much. I'll put it slightly above here, maybe 200 or 201 handle, or 201.02 or something like that. Okay, because we do not want price trading above here. If the price starts to trade above here, close the trade, move on from that, because that has broken down the analysis basically. Then when you take the trade, there are a couple of things you have to be mindful of, because you have a conviction, because you have an analysis, because your analysis is telling you this is a sell market. There are things you need to think about in terms of probabilities and psychology basically. Every trade you take, anything can happen with those trades. Okay, because every moment is unique. Because we have this pattern as one of the patterns that we like to trade, does not mean it will work out 100% of the time. So you have to be careful that every moment is unique. We are expecting sellers to come in here, they may not come in. Okay, so what is your plan of action? Is it because you are now thinking the price is coming down, you have to continue to sell when the price is breaking higher? That is why we always have a failure point, a point where we know this trade is no longer working out. And also, this is an edge, this is a way of trading. It's just an indication of one thing happening over another. It is just an indication that we have a high probability that the price will do something like this from our analysis. Okay, that is it basically. We don't predict the future, okay, but we have an idea of the directional bias. Okay, and also every trade you take have the same probability of winning or losing. Okay, so there's a random distribution between wins and losses. You don't know which trade is going to win, you don't know which trade is going to lose. Therefore, you as a trader and wanting to be consistent, you have to take those trades. Okay, you cannot pick and choose. As long as your edge is present in the market, you must take those trades. And also, you don't need to know what will happen. Once we take this trade, that is it. We don't have to know what will happen in order to make money. The market will take care of itself. So basically, this is my picture for the pound yen on 13th of June 2024. If you like this video, give us a thumbs up, write a comment in the comment section. Let me know what you think about this, and how you or if you have a different opinion, it's fine also. So my name is Shagun Chatu for 7. I wish you a successful trading week, and God bless.